I would define the minimum premium with a whole life insurance policy as the minimum amount that you have to pay to keep the policy active. There's two ways you can approach the minimum premium. We'll start with the most common, which is also my least favorite. Let's pretend you're 40 years old and you ask, Steve, what's the smallest whole life insurance policy I can buy and how much will it cost me? I would say at the age of 40, a $25,000 whole life death benefit is the lowest death benefit you can have with most of the top life insurance companies out there. The premium for a $25,000 death benefit is about $500 per year. Some products will have a slightly lower premium, while others have a slightly higher premium, but the average will be right around $500 per year. That premium can be paid one time per year, or you could break it up over 12 months. If it's broken up over 12 months, you'll see a slight fee assessed to the premium. So, the minimum premium for a $25,000 whole life death benefit would be about $500 per year. That's how most people approach whole life insurance, or really any life insurance purchase, where they just ask for a death benefit quote and they're told, here's the lowest premium you can possibly have. Now, if you're interested in cash value, there's a different way to approach it. Most people we work with are interested in putting money into whole life insurance for the cash value because the cash value is a safe place to put money. I can access it anytime without any penalties. And it's also tax-free if we follow IRS rules and we don't mess things up. That's really on the agent to not mess things up. But safe place to put money, liquid, and tax-free. People that put money into a product typically put large dollar amounts in. Let's say it's 10 grand per year, just to simplify. If someone is putting 10K per year, or that's how much they want to be able to put into a policy per year, we would set it up so they're not billed for $10,000 per year. We would set the minimum premium as low as we can. The minimum premium will depend on the life insurance company that you select. They all have different rules. If we look at our four major mutual companies, who are Mass Mutual, Guardian, New York Life, and Northwestern Mutual, the lowest we can typically push that premium is typically 10% of whatever the total desired payment is. So going back to that $10,000 maximum payment, if that's the most you ever wanted to pay, that means we could drive the minimum premium to about $1,000 per year. So now you have a minimum premium of about $1,000 per year with the ability to add up to $10,000 per year, and everything above that $1K goes straight into what is called your paid up additions rider. I call it a cash dump-in because it maximizes your cash value. I hope this helps.